His tax return says he earned $0 last year, but somehow he owns 3 Ferraris, a mansion, and takes lavish vacations every other month. How is that possible? He's writing off his entire life as a business expense. My job as a forensic accountant in a divorce case is to add back all those personal expenses to show the judge he's actually a multimillionaire. It's like being a financial detective. Welcome to the world of the tax return trap. Many people going through a divorce with a business owner get a huge shock when they see the tax return. They see taxable income of 0 or even a loss and panic. They think, how are we going to survive? How will I get child support or alimony? But here is the secret. What S reported to the IRS is often very different from the actual cash available for family support. This is where the concept of the add-back schedule comes in. It's one of the most powerful tools in family law. We start with that $0 taxable income from the business's tax return. Then we begin adding things back. What kind of things? All those personal expenses disguised as business deductions. That business trip to Hawaii, add it back. The luxury car lease for the company vehicle that's never used for business, add it back. Family meals at fancy restaurants claimed as business entertainment, you guessed it, add it back. We go through bank statements and credit card bills line by line, identifying everything from personal groceries to kids' tuition paid by the business. Each personal expense gets added back to the income. Another huge piece of this puzzle is depreciation. This is a big one. Depreciation is a non-cash expense. It is an accounting concept the IRS allows where a business can deduct the supposed decline in value of an asset, like a building or equipment over time. Let's say a business bought a building for $1 million. The tax return might show a depreciation expense of $50,000 for the year. This reduces the taxable income by $50,000. But here's the key. No actual cash left the business's bank account. It's a paper deduction. So when we're calculating income for support, we add that $50,000 in depreciation right back. It's cash that's available to the owner, even if it's not taxable income. Cash flow is what matters in family court, not just taxable income. This brings us to the fundamental difference between IRS standards and family court standards. The IRS has its own set of rules designed to calculate how much tax you owe. They allow for all sorts of deductions and loopholes, like depreciation that reduce your tax bill. Family court, on the other hand, is concerned with a different question. How much money is actually available to support the family? A family court judge wants to see the real economic picture. They want to know the true cash flow of the business and the real lifestyle of the parties. So while something might be a perfectly legal deduction for IRS purposes, a family court judge will say, that's nice, but that money was still available. It's coming back into the income calculation for support. For example, a business owner might make a large voluntary contribution to their retirement plan, which is a great tax-saving strategy. But in a divorce, a judge might limit that deduction for support calculation purposes, saying that family support takes priority over discretionary retirement funding. The same goes for carrying forward losses from prior years to reduce current income. The IRS allows it, but family court often won't because it doesn't reflect the cash generated this year. So if you're looking at a business tax return and seeing a shockingly low number, don't panic. It's often just the starting point of the investigation. The real income is usually hidden behind a wall of personal expenses, non-cash deductions like depreciation, and different accounting standards. It takes a skilled eye to deconstruct that tax return and reconstruct the true financial picture. It's not about what the tax return says they earned. It's about what their lifestyle proves they can afford. That's the real story, and that's the story we bring to the judge. Thanks for watching. If you found this helpful, please like this video and subscribe for more insights into the financial side of divorce. See you next time.